We did have a rally similar in scope back in March. And then what happened was the news kept coming out that was more and more negative. And so then the market turned right around, went back down, broke the lows, went a lot lower. We might have seen the lows. We talked about this in our last podcast, but we might not have, right? We could see the market turn around and keep going lower if the economy gets worse. We'll talk about how the economy can get worse from here if it is going to. Now the federal government today is planning in the House to vote in the latest spending bill, which is mostly about green energy and priorities of the ruling leadership in the White House and in Congress. But they're saying that we're in a recession. We've already had 2 quarters of negative growth, and there's 400,000 level that will be the highest level that people will be taxed on. There's going to be new taxes issued, but I think technically they're saying no individuals would be taxed if your income is below 400,000, that level. But a lot of businesses are flow through to an individual tax return. So many of the small businesses are going to have higher taxes. So while they're technically correct that maybe individuals won't have higher taxes, a lot of people with incomes less than 400 are going to be taxed through businesses. So like everything, when you deal with politicians, you're not always getting the full story because there's just not enough money among the top 1% to raise that kind of tax money that they want. So anyway, so there's going to be new taxes. And Chris, the inflation continues, although it's faded a little bit. We'll have demand destruction from the inflation if we don't reduce inflation quickly. Consumer spending will decrease, and then that will eventually affect corporate earnings. So they really need to move fast to get inflation down. Just yesterday, the president came out and said this month there was zero inflation. Now, that's not really true because we were up, Chris, what was it, 8.6%?
8.5. Yep.
8.5% on the CPI year over year. But it was higher year over year last month at 9.1. That was the highest number that came out. So compared to last month, there was zero inflation or no growth in inflation. This month, that's what the president means. But that still means the numbers are really still high. There's big inflation, some record inflation, right, Chris?
Yeah, and I think one thing it's important to point out is, and I think the president said this, is some things went up, some things went down. I think it's important to note is a lot of the things that did increase, a lot of families and just general people will still feel. Actually, electricity prices still rose 1.6%, baked into that number. Food prices rose 1.1%. And I think it's important to point out that's the 7th consecutive month of an increase of 0.9% or more for food prices. Those continue to move upwards, and rent prices increased 0.7%. So, food, lodging, electricity, all those still increased, and that still will hurt individual families, or they'll still feel that, I should say. But I think where everyone really felt it and where we saw the most movement was in gas prices. I mean, if anyone's filled up their car lately, it's obviously been refreshing. It's off the highs of over $5. I think it just averages now below $4. I think it just fell below that on average. Around the country. So we are seeing it in certain areas. Airline fares have certainly decreased, hotel rates, things like that. But the base necessities for families, even though the consumer price index came down from the high, some are still increasing certain areas.
Well, and then you said gas prices were down, so airline fares were down also because that's fuel related, right, Chris? Month over month.
Yeah. So gas prices were down 7.7%, and airline fares were down 7.8%. So huge drop-offs, I would say, from those two areas in particular. And I think that was the big driver behind that number. Is we saw massive drop-offs from gas, airline fares, and these fares got ballooned up over the summer, especially. I mean, these were big drivers behind it, but. It's still important to point out that some of the base things are still moving up, base necessities.
Now, what about the other income numbers, PPI, CPI?
Yep. Yeah, so we just talked about the consumer price index. The PPI was up 9.8% year over year in July. So still a very hot number there. It did pull back just like the consumer price index from the June number, which was 11.3%, but still a very high number. And a lot of economists, a lot of people look at the producer price index as kind of a crystal ball, if you will, into what the CPI is going to be. Because obviously if producers have to pay more, they usually tend to pass those costs along to whoever's buying them. So that's still a hot number, so we'll have to continue watching that. The personal income rose by 0.6% in June. So that's positive, but I think it's important to look at it. If you factor in taxes and inflation adjustments, that number actually comes out to negative 0.3% personal income. So after you factor in a lot of what's going on, we are seeing people losing purchasing power, really, is what that would show. U.S. household spending, though, was up 1.1% in June from a revised 0.3% increase in May. So that's positive, and I think that kind of talks about what you were mentioning, Brian. We still are seeing some spending there. Now, the fear is if we see that start to taper off and we see that start to go lower, that would start to drive even bigger recession fears and a worse recession, I should say.
Yes.
Personal consumption expenditures price index, which is kind of what the Fed looks. It's just another way to look at household spending. That was up 6.8% in June year over year versus 6.3% increase in May. So that June number was good to see. We don't have the July numbers yet. We'll have to wait and see what that gives us. The Institute for Supply Management Index, that's kind of U.S. manufacturing activity. This is what it showcases. It was at 52.8 in July, a slight decrease from 53 in June. So we are seeing some contract or moving downwards in that index, but it's important to note anything above 50 is growing. It's not in contraction at all. So overall, it's still kind of a mixed picture, I would say.